Good evening, everyone, and welcome to Price Action Trading School. Today we will talk about POC zones. As you know, POC zones are my trademark. This is what I've been doing all this time, and this is what is very, very accurate in Forex market. Since I've been the creator of POC zone, I can say that POC zones are very, very subjective, and they're not for everyone. So in order to understand the concept of a POC zone, you definitely should have listened to all what I had to say during previous sessions. So before we begin, we need to go through risk disclaimer, explaining that CFDs and Forex trading are leveraged products and can result in losses that exceed your deposits, and products may not be suitable for everyone. So please ensure you fully understand the risks involved. This video is part of the not part of the .co.uk website, but the globaluse.com website. So my name is Nenad. So we will talk about trading in the zone, benefits, disadvantages for people and traders who cannot understand the concept or who can't grasp the concept as they should, and of course about charting. So the first thing when we talk about zones, we need to say that the candlesticks, guys, are simply not enough. Okay, candlesticks are not enough. I respect candlesticks. Really, I also think that candlesticks are very important part of the confluence. They can be very, very strong part of any zone, but definitely in today's environment, it's not enough. We need to understand also other things before we delve into candlestick concept, into POC zone. Candlesticks are, well, they were maybe, I mean, they were surely good back then where volatility was not that high, like 20 years ago, 15 years ago. But today, simply by trading by candlesticks, that is not enough. There are a lot of patterns that have not been so common before, such as stop grabbers, different patterns that were unknown. Those V-shaped reversals that are a form of strong profit taking. So everything that happens today, well, it was not the same as it was like 15 years ago. Also, when we talk about trading in the zone, we need to mention that definitely it's not about exact levels. As you know, because you've been following me, or if you are a new user that you're listening via YouTube, you need to know that again, I'm the creator of Camarilla MACD and POC zones, and I can say that the accuracy is like 80 to 90% at the first rejection. So it means whenever the price comes to actually hit the zone, there should be some sort of bounce or rejection. That bounce or rejection accounts for 80 to 90% all the time. The only difference is when we don't actually when we don't have a good market. It means when market is very, very fast and some let's say very important things happen in the market, then we can see that price goes through POC zone. But guys, usually it will stop grab below or above POC zone, and usually it will go straight away towards POC zone. So let's say that 2 weeks ago when we had session recap webinar, price went below the zone, but then suddenly it came after it collect all the stops below, it came back at the zone, and then it spiked from the zone, making huge jump to the upside. So what I need to tell you is when we are talking about POCs, we don't talk about exact levels. We usually have like 15 pip buffer for the zone, depending on average through range and depending, of course, of general movement of the pair. If the pair moved by a huge number of pips during a day or last 7 to 14 days, then definitely our POC zone will be much higher. It won't be the same. That's normal. I mean, that's something that you shouldn't be afraid of. I mean, that is why it's a bit accurate. But, well, you need to know that it's completely different approach to what you have been using so far. I know because I was really into uh, my method of analysis and trading. I've been doing that for a full year. It was definitely all this what you learn here is practical naked trading, and the POC zone is the borrow concept that I've been developing for a full year before it actually went live. So that is what we are also about to see. It's not about the level, it's about the zone. The zone is where we want to trade. Uh, the thing is that we always look for confluence, guys. We always look for confluence. There is no way in doing anything other than confluence, simply because the biggest achievement is to actually have more profitable trades than losses. So for that you need to have a confluence. If you don't have a confluence, it means that you are still trading with either a system, let's say indicator-based system, the system that gives you stochastic cross entries, something that is not very accurate. Most of the time you will see that those entries are not that good, so you might find yourself a bit puzzled with entries. So if you try to spot a confluence, there is a big chance that you will actually have a good entry in the market. If the case is that you don't know how to chart your confluence, or you don't know how to see the confluence, because as I told you, it's a bit subjective thing, then guys, well, you need to actually try to demo chart it to see on the demo account how it works, and to see if it works for you. It's not for everyone, but here I am. As you know, starting from 22nd of February, we will have additional live session on Wednesday, and there I will also chart those zones, so you might learn also from those live trading sessions. But I'm sure that you are also learning from session recaps and my analysis that you can read each day. POC is short for point of confluence. So the point of confluence is the exact zone where we expect the price to react. So that is the zone that is usually charted on your screen as POC, and it incorporates a lot of price action factors such as pivot points, Fibonacci, EMAs, also additional confluence points such as chart patterns. A Camarilla is a must. So that is what you need to actually have in order to chart a POC, as I do. Of course, as I tell you, it's not that easy. It's hard, okay, especially because it's subjective. And what I see, it does not necessarily mean that you will see the same. Next thing is what I wanted to tell you is we need to use Camarilla or pivot points. I personally prefer Camarilla, so that is my way how I do it. Well, as I said, some traders prefer to use other pivot points. I know that some traders are using Murray Mat, other traders are using standard pivot points. I've been very fond of Camarilla for a long time, and I think that Camarilla pivot points are very accurate, and they have a strong part of the confluence. Also, we use patterns. I was already now we are going through all these things, guys, what we have learned during the price action trading school. Patterns are also extensively used in the POC zone charting. Patterns are one of things that had a much higher, that were, let's say, much more significant years ago than they are today, but still they can give us the cue where the price wants to go. So they can really give us a strong cue where the price wants to go. So when you use the confluence, when you use POC zone, you must be ready to actually see and spot a Forex chart pattern. Also, I like EMA 89, especially because 88.6 is my favorite retracement. I think that in Forex trading, it's even more important than 61.8. So 88.6 rounded is 89. So EMA 89 is very strong. As you can see, there are usually some nice patterns emerging from EMA 89, such as T89 pattern, and actually it can also show you a nice support and resistance zone, nice support and resistance level, especially if the price, if the EMA 89 is the part of POC zone. Trend lines, don't forget guys, trend lines, very important. Trend lines are something that you should always pay attention to. Those trend lines that we teach and that I teach are very strong, in their own sense, because generally when we see a nice trend line, a good trend line that is supported or resisted at, then if the trend line is broken, we might expect a strong reversal or retracement. Trend lines also support a current trend, so whenever you see a trend line that is, as we already defined it, well, you need to know that it can be a great way to actually spot a trend. So sometimes you don't need any other guys indicator than a trend line. So I really like those trend lines, and trend lines are very important part of my everyday analysis. Okay, you need to know that. Fibonacci retracements are something that we cannot do anything without. Fibonacci retracements are a must in POC zones. There are very rare occasions where we actually don't use Fibonacci. The thing is, those occasions are usually when price is going counter trend, because when the price is in counter trend, we don't need to use Fibonacci. Fibonacci is used in trend, the trading environment, in the exact environment where we want the price to spike. So that is when we mostly use our Fibonacci. You need to know that a lot of traders pay attention to Fibonacci. So the more traders that are paying attention, the stronger the level of Fibonacci is. Mostly during trend trading, traders pay attention on 50, 61.8, 78, and 88.6. But I also know that some traders also follow 23.6 or 38.2. In my opinion, 23.6 is only valid during strong trends. I'm not very keen of using 23.6 retracement, because that retracement is really shallow. For all people who joined up later, this webinar is recorded and it will be uploaded, so you will be actually able to see it again. ATR pivot points are also a part of Confluence. They're not, as I say, they don't need to be a must of for a Confluence. But because we use ATR to project the range and project possible targets, I might say that ATR is also very important part of my Confluence. And I think that Confluence is stronger even if it incorporates ATR levels and zones. So always pay attention to ATR levels and zones, because it can make up really for a nice Confluence. I don't need to remind you that you will always see ATR on my chart, and those projections that are given by ATR are exceptionally well if we want to take a counter trend trade, or if we want to take a final profit target during a day or during, let's say, a trading session. Sometimes the volatility is high, those ATR pivot points will be respected, and very occasionally they will be overshot. that when we see an overshot of the pivot point, it means that ATR has been extended. So my opinion is that we can take counter trend trade opportunities, and that is what we are actually striving to do. That is what we want to see. And mind you guys that for counter trend trading, it's very important to see that ATR has been overshot, or the price is very, very close to ATR. So you need always to pay attention to that. I respect indicators, and I will tell you my story later on Forex Factory. I will actually show you how we started on Spider's Den. But even before I opened Spider's Den on Forex Factory, actually, I was very engaged in euro-dollar trade. So I experimented with different settings, different indicators, until I came to the conclusion that price is everything that matters regarding technical trading. Order blocks are also a way to go, guys. Order blocks are an important part of Confluence, and order blocks are very important part of my analysis. And honestly, I like these order blocks. I already explained what an order block is, and let me tell you that an order block is usually respected during a single day, especially if we see a trend. That is when order blocks are strongest. Okay, that is very, very, very important. So order blocks definitely are very important. Historical versus now moment concept also that we talked about, and you remember, I think historical versus now moment concept was mentioned and covered in the first session of price action training school. So that is also very important. Okay, so don't shy away from that. That is something that is, in my opinion, extremely important. Okay, it's called, as I said, a historical versus now moment concept, and it is a big part of the Confluence, and it's in extreme circumstances we don't use it. So I don't remember the occasion where I haven't used historical versus now moment concept. As I said, it's very, very important, and you should definitely try to see how it behaves on different time frames. But rest assured that historical and now moment concept is always covered in my analysis, and it's very, very important part of the Confluence. I mean, it's extremely important part of the Confluence. Nivin is saying, can you explain order blocks quickly? I explained it. Just try to go to Google and or also YouTube, and I explained it during previous price action training school order blocks. So I think that it's recorded. I don't really have the time now to explain order blocks, but at least if you don't know what order blocks are, then I will give you a quick hint. Let me just share the screen with you. I did a blog also explaining what an order block is. Also, guys, I will make a slight digression from our subject. Here you can read my new blog, Don't Let Trading Become Gambling Addiction. This is what I published today, so please go ahead and read it, and of course pay attention to volatility protection tools. This is extremely important for volatile market. Okay, so try to grab a hold of it. Here under Traders blog, I explained what let's see, I remember there was a blog. Let me try to find it. It's on the second page probably. Yeah, here, T89 and proprietary candlestick patterns. So here you will able to read about order blocks, and I think this explanation will be enough. So this is important part. Okay, here order block. I will go also, guys, on that more extensive also on session recaps. So next time be sure to log into session recap and just send me a question about order blocks so I can actually explain into a bit more deeper details. Okay. Also, guys, all price action knowledge should be combined. Okay, have in mind that all price action knowledge should be combined. Zones are subjective, so don't expect that we can chart all these zones simultaneously at the same time, then that they will look the same. Every time POC zone is charted, every time it might be different. So I know how to do it, and I can explain how, because POC zones are where we place our entries at, but have in mind that zones are very, very subjective, and that traders actually really need to have a vast knowledge about this form of analysis and trading in order to chart zones 100% correctly. As I say, price action, what I teach here is very, very strong, but because it's very strong and very accurate, it's also very hard. So the hardest thing is to find a proper zone and chart it. But as I know really some traders try to do that, and they send me their screenshots usually on Forex, on Spider's Den, and some of them know how to chart, although as I say it's a very, very subjective and definitely not for beginners. What I see, guys, doesn't mean that you will see too or that you can see too. It's same thing in trading. Some people, I mean majority of people actually wanted to go short last week, and I think that I was one of rare traders who actually went long on euro dollar when I gave you the setup for euro dollar. I hope that you really made a huge amount of pips. But you know, that is the fact. We can see the same chart, even we can use the same system, but we will all have different results, guys. So whenever you are actually asking about system performance or how a method is performing, it's very subjective. Some people, I mean, I always say, if 100 people use the same method, those 100 people, every single person, all of them will have different results, guys. Okay? Believe me, this is the learning curve of one of the accounts I have managed. So you see, guys, I've been using my knowledge. This is a bit higher account that I did for some people. Well, it doesn't matter now. But the thing is that you see here, it's very, the curve is high, the difference is big, okay? But the same people who asked me to provide my equity curve, well, they had their drawdown much higher than I have here. You see, the profit here is, it's a mid account, so it's not that high account. 50,000, guys, it's okay money, but you know, it's not the highest account that I have been working for in my life. So I'm pretty familiar with this number. I mean, for some people this might look like a big amount of money, but well, believe me, guys, if you can make 10% on 500, the thing is the same with higher amounts of money. You just need to use it's easier. It's much easier to trade higher accounts, bigger accounts. So here, guys, you can see that actually drawdown is 10%. Some people told me that it's impossible to have. Well, this is, you see, it's very good. It's more than 20% of profit, but drawdown is really low. So yes, I say it's because positions are very accurate. Even though we can use a lot of different tactics such as scalping, such as other things, the thing here is maximal drawdown is not high, and the curve of this account is very, very good. You see, Ilya is saying 50,000 is minimum for DAX future according to some index trading gurus. I mean, Ilya, I've been trading with 150, 160,000 GBP pounds. Back then it was much more than 250,000 euros. What trading gurus are telling you, don't believe in everything what you hear. I only believe myself, and I respect other people's opinions. I respect other people's analysis. Everyone has the right to their own opinion. But my friend, who is also full-time trader, he was always saying, and I say too, trust your own guns. So you need to trust yourself. If I started to read every single analysis and what other people are analyzing and telling me about, well, I wouldn't go nowhere. I wouldn't be what I am today. So I always believed in myself. I always believed in my own way of trading, of analysis, of charting POC zones. There were, of course, many ups and downs, but because of that, we learned how we can actually manage even if bad things are happening. Yes, I mean, Ilya, 50,000 is good amount of money. But, you know, if I told you that, well, you know, funds, if you ever traded a fund or saw what a fund is, we are talking about millions and millions. Yes, it's not small. I mean, it's not small account. Small account is $500, $1,000. That is a small account, right? But 50,000 is not small in retail sense. Now, if we are actually referring to retail account, but if we are talking about professional investment accounts, well, that is the least that account can be, really, the smallest of professional accounts. All my friends who are actually trading full time, I mean, doing equities, Forex trading, well, they all have more than 50,000. You know, I mean, it depends where you live. If you lived in Thailand, then 50,000 is good. But Ilya, since you live in Switzerland, I know that 50,000 is okay, but it's not that high, right? Because the average salary there is like 5,000 or 4,000 euros. So, I mean, you know, it's all about where you live. It's not small, but it's not that high. For a retail account, well, it's okay. So now I'm actually referring to, I received a lot of questions, can I live by trading 10,000 euros? Well, you can't live by trading 10,000 euros. I mean, you can live in the country where the average payment is $5, $10. Then $10,000 euros is a big money. But if you want to live in a Western economy, right, in European Union, well, just don't think that you can just trade 10,000 and you can live with it. I mean, be realistic, okay? So this is now what we are actually talking about. This is the same. What I see doesn't mean that you see it too. So everyone has different opinions about how much they should make per month, how much the drawdown should be, where is POC zone, where is rejection point, should we go long here, should we go long now? Guys, there is literally thousands of different Forex systems out there in the market. And believe me, guys, there is literally thousands of different methods. Everyone sees differently. But what I want to see here, what I want to teach you is to trade like banks. Banks move the market. You as a retail trader should always follow a bank. So don't think that you don't know to trade if you actually cannot understand the principle of POC zone or the concept. I am here, I am providing and will be providing you with analysis every day, guys, okay? And even though if you cannot understand it completely, try to trade it. Try to go with my recommendations where to put and place trades, and you definitely should be fine. You should see things differently. It requires a lot of patience, definitely, to understand the concept of trading in the zone. It requires also a lot of screening time. okay, a lot of screening time. And my story actually began when I started to trade on live accounts. I was very, very active on, as I said, on Forex Factory. It's very, very, as I will show you now. This is the thread that I've been using, but also before the thread I've been very fond of, here this is my profile. My thread is called Spiders then, but I was also very active on Eurodollar thread. That is where I actually earned my name and where I became known as Tarantula. So here, guys, you see the thread was actually open in 2011, and it was very, very active thread. And back then I wasn't a commercial member. You need to know, whoever works something publicly where it's actually a commercial business, like making money out of, well, let's say selling education, giving education for, or is paid by anyone, well, he will be moved to commercial section. So back then I was actually I took a huge part in non-commercial section. Spiders then was one of the most popular threads all the time on Forex Factory. When they had the last time when I saw the counter, I had more than 4 million visits back then. So it was a very, very, very popular thread. And then I continued my trend, even though it's moved to commercial section, it's still popular. I mean, it doesn't have so big traffic as it had back then, but it's still, guys, very popular, and I can assure you it's still quality, because you can always read my analysis there. You can always read now. Chris is also posting there. You can ask questions and so on. This is the time. This is one of my friends. His nickname was Black Widow, and he was also a very respected member of Forex Factory. We worked together, and we are actually, well, you see, we were giving trades very similar, guys, what I have been doing today. Well, obviously, guys, I'm not a signal service provider, and I don't want to give you signals, because that's not the primary thing. But by reading my analysis and by using the zones or POC zones, you definitely need to know that it's a kind of pretty straight analysis. When I tell you POC zone is like 1 to 2, that means when the price gets to 1 to 2, you should go either long or short. So it's very, very easy to understand and grab the concept of POC zone and analysis. So you see, there was a time where we did it. I used different methods back then, and you see, we actually had a lot of positive comments. You can go through this thread and see how it was very, very, very active. We were using different things. We were used other tools, and as I was telling you, I will not go through all history, but it has been one of the most popular threads ever on Forex Factory. You can also see here a lot of good comments, guys, for people who are actually been following me all the time, and those dates are actually, you see, there's for 2010-11. That is when I actually started. See some good calls that worked out, but always excellent analysis. So in 2010, guys, I was doing something that now people are actually very, very aware of. I will not change the concept of POC zone. I will not change the concept of my analysis, because Camarilla, MACD, practical naked trading, POC charting, those are my children, and that is my trademark. So I don't want to change that. It works. But by following my analysis, by following session recaps and future live trading sessions, even though if you don't understand how to chart it, you will be able to actually learn. And I'm sure that you are now still learning by reading my analysis and watching session recap and other webinars. Benefits from POC zones is definitely its prediction, also reaction. Buffer zone, because we are going with a zone, we are not trading levels, we are trading zones. It's good for intraday and intra-week trading. It's based on very strong premises that I was telling you about during the first 10-15 minutes, and banks use it. The formula for that is profits and a high, very high success rate. Disadvantages. It's not for everyone, guys. Okay, definitely it's not for everyone. You need to put your mind into completely different perspective, and it's definitely not for traders who want to trade with those crosses, with some kind of stochastic signals, because we are not using any stochastics or whatever to take trades. We are actually using price action to its fullest extent. It takes time, okay? It can be both advantage and disadvantage, but for traders who want to jump in an action very, very fast, it's not for them. It takes time. So for new traders and newbie traders, I advise really to go with systems, to go with a more simplistic approach. I'm not saying that if you don't use POC zones, you can be successful. But you see, just by following the analysis and session recaps, you are successful, right? So it means that even though if you have your own style of trading, you can make new trades by following what I do. It is completely opposite, I'm sure, to what you used to, because I've never seen any trader or analyst who use POC zones. Maybe there are people, but I might say that there are probably people who use it, but they are not publicly exposed, and they are not actually using that publicly. So they might be using that, but not publicly. Other analysts, what I see, what I read, they don't use POC zones. They're using RSIs, stochastics, I don't know, different tools, their own indicators. Well, everyone has their own right to use whatever want. But I wanted, and that was my goal, I wanted to create something unique, something that I personally will be recognized, and that will benefit to traders. Because guys, I am also a trader, okay, not just an analyst, so I want you to succeed. I want you to be successful. Learning curve is high, okay? We need to be honest. Learning, okay, this is a typo. It should say learning, not leaning. Learning curve is high. Learning curve is, it's definitely, you need to have screening time. It's not easy, but it is achievable. Now, this can be a benefit. There are no way to make an expert advisor on POC zones. Some people were asking me, can I make expert advisor with for predicting, for charting POC zones? And definitely it's not possible because it's subjective, guys. I need to tell you, it's how you read your charts. It's not automated method. It's not like T89. You see a pin bar, you see EMA 89, and it rejects. You can say it's a T89, right? So you don't have to be subjective for that. You don't need to be subjective if MACD is going below zero line. You don't need to be subjective if price is approaching, let's say, a pivot point. It's very clear. But POC zones are clear to me because I know the best how to use it. Other people might find it a little bit, you know, they can chart different, those POC zones, so we will not get the same levels. So you need to have the feel for price. You need to have the feel for price action. You need to be into this 100% in order to do it successfully. Now it's time to actually show you live chart, and I mean, it's pretty much, I will show you, it's easy for me, of course, but well, for people who are actually not fond of this, they might find it hard. They might find it very, very hard. So if you remember, guys, what I said uh, in previous session recap, and my analysis showed that actually, let's say that this zone was good to buy into. You need, guys, to always have, you need to chart those historical highs and lows. So you remember quadrants. So you need to have quadrants. So let's use price action for this day. So I always chart tops, I always chart bottoms for previous quadrant. So for previous quadrants, you need to chart it. Okay. If I know that there is an uptrend, because it's obviously an uptrend, you can place even a trend line here. You don't need to have any other indicator than price to see that EMA actually also is supporting here. You also have an upward ascending trend line here. If you zoom out of chart, you can also see that price is being up, up, and up. So just by reading the chart, you can see that trend was changed on euro dollar. Okay. Now what we need to do when we did this, these are weekly pivot points. They change only per week. So here, guys, we can actually place a Fibonacci, okay? We can do it like this. So we might say that if the price gets here, this could be a POC zone. Why? Because first of all, we have an order block. It was historical high on previous quadrant. It is very close to 50 level, okay? And definitely, even if you watch historical price action, now you need to zoom out. You will see that in the history there were rejections from this spot. In near-term history, this level was broken. Also, guys, in near-term history, you can see inverted head and shoulders, or bearish shoulder, head, shoulder. This is a shoulder, this is head, this is shoulder. So this is, let's say, a trend line that broke through it, retested, and went above. Now, guys, when you take all those things into consideration, you might say that this is definitely uptrend, this was the retest, and if the price reaches this zone here, okay, and even 0.720, it might spike off. Okay, so you see, charting POC zone is not that you can learn just by doing what I do. It's very subjective. It's about reading price action. My biggest benefit of this is, guys, I spent a year to actually create something that is very, very useful. POC zones were the logical advancement of practical naked trading that I've been teaching you on price action trading school. So it took a year to actually see that it's very, very beneficial to traders, and that traders actually can benefit from charting POC zones. The best time frame for that is, of course, 1 hour time frame, because this is an intraday method that can expand to intra-week. But sometimes when I want to see that price can, let's say that the analysis can be valid for 3 days, we can use also 4 hour time frame. But usually for intraday, I stick to 1 hour. There is no other time frames. So it's 1 hour, 80% of the time, 4 hour, 20% of the time. As I say, charting POC zones can be very, very, very different for all traders. So you see, guys, when I see this euro dollar CAD, I might say that the price is dropping, but there is no real trend now, so we might skip it. The first thing I want to see a nice trend. When I see, guys, a nice trend, I will give you a setup. If you remember my analysis for today, I actually use daily pivot points. You will see that I predicted a long on pound yen, and if you followed my analysis on pound yen, definitely you would have had profits. So here you see, I mean, you can read the analysis too. It was very clear that this was uptrend, right? Watch this. Gap was closed by a huge momentum candle. Okay, this was a triangle, I mean flag that failed. This was a bearish flag that failed bearish flag, strong buyers, very strong momentum, gap close, zigzag. I mean, really, do you really think that pound yen was good to short? Evaldas is saying he made nice fips from pound yen. Of course, guys, I mean, that is my job. I want you to make pips. I don't want you to lose, right? So I scanned through different pairs today, and I saw that pound yen definitely was good to trade to the long side. Whenever you guys you see that you made nice pips, just tweet about it, and I will also share, because I really want many traders to see this, a lot of traders to come here and trade it. Here, guys, let's use the example for today, also connected to question, Navin. Horizontal lines, Navin. I use usually 2 to 3 quadrants before the present day. So this is present day, so I will place horizontal lines here. So this is an order block, also very important level. This is also order block, and 2 days ago this was a high. Then yesterday low was this. Yesterday high was this. Okay, yesterday, then 3 days ago we had the same order block. So to me, guys, this was the indication that this is the strongest part of this confluence. You see, this is, some people call it triple top. I call it order block. This was definitely bullish order block. This was also order block, bullish order block here, bullish order block there. Watch this. You can place a Fibonacci here, guys. Okay, you can place Fibonacci here. You see, this is a 61.8 retracement. It's close to order block. It's very close to order block. So what I think is, if the price goes there, we can buy it. The price went there, but I also said if it gets above H3, we will not see POC zone, but rather we will see a topside action. So what you need to do is actually to zoom into lower time frames and try to trade a breakout of H3 level or rejection, because this is POC zone. If the price got here, we would have a perfect POC zone, because we had L3 pivot point. This is support. You don't go long on resistance. You go long on support unless resistance is broken and retested, as it happened here. So L3 support, daily pivot point support, EMA support, ATR support, guys. ATR support, order block support. Really, 141.85 to 102.00 was the POC zone. The price went there after the analysis. It didn't have a strong momentum to get to POC. This was the cue for me that if the price gets another attempt above H3, it should proceed. And what happened? Exactly as I said. So to me, this was more than enough. So guys, you need to watch everything, guys. If you know what is a rectangle, this is a rectangle here, consolidation. This was breakout after consolidation. These are order blocks. This is upward ascending EMA. This is support. This is zigzag. The gap has been closed. Strong momentum candles. This is uptrend. So you see, I can read the chart as fast as I can, because this is the way how I analyze markets. But for many traders, this is very unknown to them. To chart a POC zone is simply not enough to just say, okay, Nana, this is great. I know everything about what you have what you have been teaching us so far, but I cannot pinpoint the exact POC zone. That is why you need experience for this. You cannot just watch a single webinar and say, I know how to chart POC zone. That is why you need to join session recaps. Guys, session recaps are something that you can learn a lot from, because I always explain the logic of giving you the trade setup. You need to read my analysis every day, and you will understand the concept. Now I'm telling you what I usually do in order to find a good POC zone. Session recaps are each Monday, okay, exclusively with Admiral Markets, okay, each Monday. Here I will show you, you can join easily here. You really don't need to place a lot of effort in finding webinar. It's once per week. It's under education. webinars, and here session recap. So sign up here, you will learn a lot. And also read the analysis here, because what I'm explaining now, actually, you see, guys, this is what I give you setups for. This is where you can learn a lot about POC zones. Okay, this is where you will learn a lot about POC zones. Technical analysis on Admiral Markets YouTube uses my charts. Whenever you see analysis by Tarantula, you know it's me. So you will learn a lot about POC zones. Navin is saying he is in America, so the times are a lot different. No, Navin, yes, I mean, the best is if you can actually join for webinar real time, because sometimes it will happen that we have entry during the webinar or slightly after the webinar, and webinars are uploaded tomorrow. So the thing is, if you're not live on webinar, you might miss good setups. Also, analysis is usually done when both US traders and European traders can actually assess it. So bookmark this website, analytical section, technical analysis, and you will learn a lot. Also, I post to Forex Street, so you can read a lot on Forex Street, and definitely you will find me also on Forex Street. Everything is updated real time. So when I do the analysis, I place it immediately. After a few minutes, you will find it here, and I always tweet about it. So you will also see my tweets. Let's say, guys, for example, Euro Yen. You see, guys, for me, this is also good indication that the price is indeed in uptrend. We have a huge, guys, this is head and shoulders inverted. This is shoulder, head, shoulder. This is the indication that the price might actually go go above this level, and should the price close above this trend line, I expect continuation. That should happen in Asian session. For buying opportunities, you actually need to chart again POC zones. Today we had a POC also here, so trend line was here. Also, this was the bottom of the right shoulder. If we place Fibonacci, we will probably find some big number here. Yes, exactly, 50%. It's okay. Also, you will see that, let's see the history here. History says that this is order block here. Okay, you see order block triple top. So definitely, okay, price aim to stay here and try to reject. And you see the price is indeed trying to reject. Australian dollar, New Zealand, last day I was telling you, you could have read on Forex Street that the price went here, and if you went there you could have made 30 to 40 pips. Now the price is going a little bit more to the downside, but you see, guys, this is still a sort of uptrend because this is the previous swing. Until this breaks, you see, then the price might get into downtrend. This is just a correction. So that is why I was saying that Australian dollar, New Zealand could have been bought on dips, and yes, it's still bought on dips. For best POC zones, you need to have a best trend. Best trend, you need to find where the price is trending. Here, guys, pound dollar is a buy trade. Definitely, you can see here. So let's say this is the previous high. Okay, this is previous low. Then previous high was also here. Previous low was here. And third quadrant before today, this was the high, this was the low. Okay, here, this was the swing. You know, you need to understand the swing concept. So this was the swing low, this was the swing high. This is the order block here, and yesterday's high. This is V-shaped reversal, mini shoulder head shoulder pattern, bullish pattern, W reversal, again bullish pattern. So here, guys, it's not just a coincidence that the price went here and rejected to the upside 80 pips. You see, it is 38.2, but there is order block, very strong. H3, that is very strong, because once H3 breaks, this will become support, not resistance. So this was indeed, especially because H3 was broken, H4 was tested, and then price went back to test H3. So you see, this was not a coincidence that the price spiked from this POC zone. Also, guys, ATR middle pivot point. What more you need for this? And also here, if the price went below this, this is another POC zone. When price is in strong trend, you will see two POC zones. So this is another POC zone, and I would definitely place along here. You see here, a 78.6. Should the price drop now, let's say hypothetically, I would definitely go along here. EMA 89, pivot point support, L3 support, previous buyers here. Also, you can see not just previous buyers, but you can also see V-shaped reversal. It's L4, very strong uptrend. Well, you see, another POC zone. And here Leon is saying he traded pound today based on my theory and got 100 pips. Well done, Leon. Okay, Mr. Leon Shaw is a UK trader, and he is also following me, and you see, making good pips. Well done, well done. Zones are indeed the best, guys, and well, if anything happens tonight, this is the place where you can place a buy trade. Watch for this. 28.50, 24.50 if it happens. I'm not sure that pound will drop 200 pips, but you know, if something happens, I think this could be good for a long trade. Okay, guys, so this was it. As I said, all these concepts should be followed thoroughly. For people who are actually following me for a long time, it's much easier for them to spot a POC zone and to chart it. But still, guys, do not despair. I'm here. I will be here for you, always giving you the analysis based on POC zones, wool waves, okay, also, and I will be providing you with session recaps and with live trading from 22nd of February. That will be the extension of session recap, but also aiming to place some market orders if we get the opportunity. Thank you guys for listening to me. Follow me, follow this analysis, follow what I have to say, and you should be fine. So thank you once more, and I will see you soon. Cheers, guys. Talk to you soon. Trade safe.